So, jumbo rate cut yesterday.
Yeah, big news. Bank of Canada cut rates by 0.5% in line with the feds in the States. Sounds like inflation is now under control and there are more rate cuts to come.
That's right. And originally we were thinking 0.25% and then 0.5% in December. But I think instead of it being reversed, you have the 0.5% yesterday and you're probably going to see another 0.5% in December. What do you think that's going to do to the market?
I think there's going to be a pop because you're going to have buyers. I mean, there's certainly pent up demand, right? There's buyers that have been sitting on the sidelines for the last couple of years. Rates have slowly gotten higher and higher. And now it's clear rates are coming down fast.
Traditionally, when rates were, going down, your high-end buyer knows that prices would go up and they buy real estate, right? And but that didn't happen. And it didn't happen largely because you had the mayor of Toronto increasing the land transfer rates substantially. That put a lot of people on hold. Then you have the feds who increased the capital gain rate, and all this going on with the interest rates going up, leveling. Only now are they going down, and we're going to see a market stir.
Yeah, and I think that caused a lot of uncertainty and inaction from buyers. So I think we're going to see a lot of pent-up demand now that there is more certainty that rates are coming down and sounds like it's happening fast. Mm-hmm. So I think for sellers, there's going to be some buyers with urgency that have put their plans on hold for a couple of years and now feel this is their time. And for buyers, they've got a lot more choice than they've had in the past.
I think that affects the low end, the median, the mid-range, and the high ends, that real estate food chain. But let's just look towards next year. In my mind, I'm thinking that you've got 2 million mortgages coming up for renewal at 2%. These are the mortgages that were taken at 2%. Your younger brother is one of those customers. But now, with rates falling so steadily, the 2%, instead of looking at being 6%, which was the threat 6 months ago, it now looks like 2% will be 3%. Some of the banks have jumped on with the amortization schedules and creating 30-year amortizations.
Yeah, I don't think there's going to be that same concern there was maybe half a year ago on the renewals because people are likely renewing at a similar rate come next year. Maybe a little bit more, but not dramatically more.
Okay, but dealing with today, I think it's all good for real estate.